Why should financial services firms seriously consider RPA-based systems?
As you know, in our information age and Moore's law that dictates that every year the information flow doubles, we can't really afford not to, because the sheer volume and the number of errors that may be associated with this volume is constantly increasing. The robotic process automation is the only way to solve this volume/error problem. Computers can handle multiple parallel processes so that we can introduce redundancy in our documents and therefore reduce errors.
What kinds of operational changes should firms expect to make when embracing robotics?
Well, the number one operational change should be looking at the existing processes and critically thinking through them, finding which of them are still applicable. And operational changes will lead to embracing people from different divisions, from different parts of the company, to look from the outside in and see which of the processes are still relevant. And those are the main changes that people who are thinking of RPA going through. Another change is to create awareness of the robotic system within the company and create the desire to embrace it. That is the huge operational change.
What are some business culture barriers that firms may have to change?
The number one cultural change in any firm would be stop thinking as a human. Start thinking as a machine, because what we have been doing to date without the RPA systems is we thought through the processes that we implement in our business from the human standpoint of view. And humans are sequential, linear. They do not understand parallel processes. We also cannot think of more than two dimensions. So therefore, data structures that we employ with RPA, they have to be changed. They have to be more n-dimensional, so they will be more conducive to machine environment.
What are some of the major pitfalls that firms should avoid?
Well, the major pitfall, of course, it's just automating bad processes. It is a very common practice that we've been doing this for so many years, and that's the way we've done it all the time. Let's automate it. Let's make it faster, cheaper, more reliable, and so on and so forth, without actually looking at the process itself and seeing whether the logic of a process is broken. Another pitfall is to try to automate everything. It is not, well, first of all, it's not possible, and secondary, it is not advisable, because only redundant, only repetitive processes you should look at to automate first. The processes that are very difficult to formalize, to create algorithms for, they should not be on your front-runner sort of automation process.
And then just quickly, what would be a good example of a repetitive process that could easily be taken over by a robot?
Well, for example, transaction records. After the trading day, all the tickers get summed up and get reconciliated. Customer onboarding processes. It's a very repetitive process. You need to fill out many forms and such. There are many processes in the financial world that are not creative, they're very repetitive. We've gone actually a step further in our firm. We automated a lot more complex processes, such as the portfolio management. Our artificial intelligence system we call Wallace was able to automate something that no one tried before, is the intellectual ability of picking securities. That took us quite a few years, but those are the examples on the lower end and on the higher end.